Good morning. It's about 10:25 on Tuesday, the 13th of December here in New York. I'm Jeff Christian of CPM Group. The U.S. Consumer Price Index data for November was released this morning, and I want to review a little bit about that, and then we'll talk about gold and silver markets. The CPI has, on a headline basis, which includes more volatile food and energy, been declining now for about 5 months, and it declined further in November. The CPI, the cost of consumer consumption index to what people actually buy, was about 7.1% on a headline basis last month, and that was the lowest level since December of 2021, showing signs again that consumer prices and inflation are declining. I'll get back to that in a second. Looking at the core inflation, which excludes food and energy, the December number was 6%. That was down for the third month in a row, and it was down to the levels that we saw during the summertime. Inflation is a complex thing, and it's often gruesomely oversimplified by the press and by commentators, and the commentators really ranging from mainstream commentators and analysis to the fringe guys with the gold conspiracy theories and such not. Inflation comes from a number of places. It's not just like a thing, a blob that attacks the economy and all of our lives. And what we've seen over the last 2 years, if you go back to 2021, even if you go back to January, February, March of 2021, you'll see that inflation was 2% or lower. So it's really since March, April of 2021, about a year and a half, year and 3 quarters now, that we have seen higher inflation. And part of that was cyclical, and part of it was secular or semi-permanent changes. Also factoring in was the fact that Russia invaded the Ukraine and caused a war, which has led to all sorts of issues, disruptions in oil and gas prices, supplies, higher oil and gas prices, disruption in wheat exports from both Ukraine and Russia, which led to higher wheat prices for a while. They've come back off. There are a lot of complex factors. The cyclical factors have dissipated or are dissipating. Some of the secular factors are still there. One of them is workforce and employment. And so we're seeing stronger prices for salaries and income, which is a good thing, but it has an inflationary pressure. If you look at the data on a month-to-month basis, which really tells you much more about what's going on in the economy in November, as opposed to year over year, you can see it was 0.1% on a total basis. If you exclude food and energy, it was 0.2%. And you can see that's pretty low. We were down at 0 in July. Excluding that, we're sort of matching August 0.1. And again, going back 12 months, we're down sharply on a month-to-month trend. That tells you that the price increases in November. This tells year over year tells you that the prices are still high compared to where they were a year ago. But the month-to-month tells you what the price pressures were in November. As I said, the Russian invasion of Ukraine has been one factor, supply chain disruptions, more hostile relationships between China on the one side, the United States on the other side, and also Australia and other Asian nations and Europe. Those all have been factors in there. If you look at the things, you've seen many energy prices decline in November. Food prices were still pretty high. And then in the all items less food and energy category, it was a real mixed bag. So you saw, for example, a 2.9% decline in one factor within the services, less food and energy. So you're seeing changes in the US economy, changes in the employment structure. There are a lot of people who seem to have disappeared from the workforce. So we have a lot of jobs and we have strong employment growth, but we still have a lot of unfilled jobs. And there are people who are just not working anymore. And that's causing some wage inflation, something that we just have to live with. But the trend clearly is toward lower inflation. The mainstream consensus inflation expectation is that inflation may be down to 5% or even 4% by the end of 2023. And so that'll be good and bad. It's be good because some of the inflationary pressures, both the cyclical and the secular, will be dissipating further. But it also is predicated on the view that the economic growth over the course of 2023 is going to be very low or flat. We may avoid a recession. I think the consensus is that a recession emerges probably in the last half, maybe the last quarter of 2023 or in early 2024. So you're going to have low growth, which will be having a disinflationary pressure on prices. So that's where we are going forward. I wanted to talk a little bit about, if I can find the charts, gold and silver. We've seen volatility. The prices actually are rising today, along with the prices of other currencies. The dollar is down sharply, all based on the CPI figures being lower, and that being fed into the fact that today and tomorrow, the Federal Reserve Board's Open Market Committee is meeting, and it will issue a statement and some economic guidances tomorrow afternoon. And the view is that it will raise its interest rates 0.5%, 50 basis points, down from 75 basis points in a couple of recent increases, showing the view that the Fed is looking at inflation in the United States and saying, okay, the cyclicality is behind us and inflation rates are coming down. Prices are not coming down. They're staying high, but the rate of increase in prices is slowing. So some of those inflationary pressures are coming off, but not all of them. So the Fed's probably going to raise interest rates again tomorrow. And the lower CPI figures today confirm the market consensus view that the Fed will only raise 50 basis points as opposed to 75 basis points. So the idea that the Fed will surprise the markets with a larger than 50 basis point increase has dissipated sharply. As a result, commodity prices are up across the board today. Gold was about $18.40, $18.41 the last I looked. Silver has gone over $24. Platinum and palladium have risen. Agricultural commodities and energy prices, they're all up. Stocks are up sharply. Other currencies are up sharply. The US dollar is off. That probably will continue. Our view has been and continues to be that what we've seen is, the prices of gold and silver came down sharply in the second and third quarters and stayed low into October. They started rising in November. They're rising further in December. Silver is now breaking out of that range it's held for most of the last 6 or 7 months. Gold is testing the top of that range. We do believe that that was a cyclical bottom and that the prices will rise modestly going forward. We don't think that the prices are going to rise sharply, but we do see modest increases. Over the course of 2023, we wouldn't be surprised to see gold prices claw their way back from 1740 into the 1850 range. Silver is already over 24, and we don't see it running up there right away, but over the course of 2023, A test of 27, 26, 27, 28 seems probable. I'm not quite sure that you'll see it move much above that. My last slide is just, again, tomorrow at 10 o'clock in Pacific time, 1 o'clock Eastern time, Metallic Group of companies, Metallic Minerals, Stillwater Critical Minerals, and Granite Creek Copper are going to have a live webcast, mostly talking about their companies and how they've been doing in 2022 and what they expect to achieve in 2023. Really well-managed companies with very interesting properties. We're glad that they are our clients and that we've worked with them. And we worked with the people who run them for decades. And we worked with these companies for many years, and we're happy to be with them. The first 10 or 15 minutes will be a discussion with me about the outlooks for gold, silver, platinum group metals, and copper. Please join us. The link to register is on below. It should be a pretty interesting year-end wrap-up and outlook for 2023. Finally, you can go to our website, read all other stuff, get some free reads, buy our yearbooks, purchase other CPM Group services, sign up to become a retail investment client if that's who you are. Have a good time. Take care of yourself. Stay warm if you're in the Northern Hemisphere. Have fun shoveling snow if you're in England or the western part of the United States. And we'll talk to you on Friday.